Hey, Jason Rogers here, and in this video I want to talk to you about the downsides of the SBA for acquisition financing. Look, I made prior videos here talking about the benefits of the SBA and why I am a fan of having that as at least one of the options that you use to potentially get deals done. However, there are problems with the SBA. One second here, we're going to talk about them. So number one, the SBA is a slow process. The process of getting an SBA loan is long, it's full of paperwork, it is a slow and drawn out process. That's number one, and it's not the hugest thing on the planet, but sometimes deals need to move quickly. You may be in a competitive situation, or maybe you're just really hungry to get going in this business, and let's be frank about it, the SBA at minimum is usually gonna take 60 days. I've heard of SBA lenders that say they can turn things around in about 35 to 40 days, but usually you're looking at 60 to 90 days to get a deal financed with the SBA. So that's number one, it's slow. Number two, very likely you're going to be signing on the loan. You're gonna be guaranteeing the loan. And if you indeed do guarantee the loan, you're essentially guaranteeing the loan on behalf of the United States government, or you're basically guaranteeing the United States government that you're gonna repay the loan. And you know who works with the United States government? The IRS. The IRS, yes indeed, the folks that can literally go into your bank account and eradicate all of your funds overnight if you do them wrong. This is why you don't want to commit tax evasion, right? There are horror stories of individuals who didn't pay their taxes or who tried to skirt around paying back the government, and the government can literally access all of your funds in your bank account overnight. So that is another big one, right? There's a very high likelihood that you will need to sign on the dotted line to procure SBA financing. And of course, if you do indeed sign on the dotted line, then you are ostensibly signing a pact with the United States government that you will repay them. And if you don't repay them, things can get pretty dodgy. So that's number two. Number three, the terms are not all that sexy insofar as interest rates. You could probably get a lower interest rate with a traditional commercial loan. You're usually looking at a fairly high interest rate with the SBA. Not ridiculously high. We're not talking about overnight hard money lender type of terms as far as interest rates at least, but we are talking about interest rates that are about 3 points above prime, or 3% above prime, 2.5 to 3% above prime. Right now I believe that's about 6 or 6.5%. Right, the SBA, as a side note, is a 10-year fully amortizing note. Usually, I'm talking about the SBA 7A program. I'm not talking about the other SBA program that's more related to real estate. I think that's the 504 program. But for the 7A program, it's going to be a 10-year note fully amortizing, and you're looking at an interest rate of 6 to 7, maybe 8%, depending on the time you're watching this video. It's dependent on where interest rates are at the time. But ultimately, those are three drawbacks of the SBA. I'm still a big fan of the SBA because you can procure very high leverage, and the SBA ultimately is a vehicle wherein they will finance your deal when nobody else will. So it's by and large what I would describe as the lender of last resort. And at the end of the day, I say the lender of last resort because it means you ostensibly don't need as much net worth or as much collateralizing assets to your name. By and large, you're going to be able to procure very high amounts of leverage with the SBA. And because when you go work with the bank and procure an SBA loan, the government is backing that loan. Therefore, you will by and large have the aggressiveness of that lender working on your behalf, right? Because for the lender, the specific bank that's partnered with the SBA, if they're able to get the deal done and finance your acquisition, then great, they get the loan origination fee and they have you now as a client, and that's great for them. And then assuming the loan goes well, great, you're repaying them and you're building a banking relationship with them, and that's all fine and dandy. And on the other hand, if anything ever goes wrong and you're unable to make your loan payments, well, then they just call up Uncle Sam and Uncle Sam squares them away, and then Uncle Sam comes after you. So that's really why lenders, especially aggressive lenders who are partnered with the SBA, can make SBA loans happen, and they can make SBA loans happen that they would never normally be able to get done through a traditional commercial loan, right? So even though they wouldn't be able to do it themselves, because they have the backing of the United States government, they're able to get certain loans out the door. So there are pros and cons to the SBA. And look, at the end of the day, I recommend you have a plethora of different lending options in your back pocket, whether they're cash flow lenders or asset-based lenders, depending on the acquisition that you're looking to make, whether it's, private lenders or hard money type lenders, or whether it's, a traditional commercial loan versus an SBA loan, right? There are lots of ways to get deals done. The SBA is just one of them, but I think in many regards, it's, albeit something of a high risk play, also a high likelihood of you being able to get the finance. And sometimes if you're gonna start a business and be super successful, you have to take risks. I mean, at the end of the day, and that's the one big one I'll leave you on, is, are there risks associated with buying businesses? Of course there are. Is there also quite lucrative upside to buying businesses? Yes, absolutely. So it's a high risk, high reward game, such as life. The SBA is an extension of that. Now, if you had two loans, one that required a personal guarantee and another one that didn't require a personal guarantee, would I recommend signing on the loan? Of course not. Why would you want to expose yourself to undue liability? However, at the same time, when you're a budding first-time entrepreneur, you may need to sign on a dotted line or two to get yourself going. And that's just the reality of the situation. It's not always the case, but I hear some folks that say, I would never sign any kind of a personal guarantee ever. Well, that's great and that's fine, and I understand why you feel that way, but I would also say to you that you're probably going to reduce the odds of you ever being able to get an acquisition done by a considerable margin. And I see a lot of keyboard warriors here who have it all figured out, who know that, oh, I don't need to sign, or oh, that signing is for, cowards, or for this or that or the other. By and large, these are usually people who have never bought businesses before. Usually, especially, they're not people that really have that much experience usually, because lenders are very, very, very discerning individuals. If you've worked with bankers, these are conservative, by the book individuals. Every loan that any bank ever makes must be reported through their relationship with the FDIC and other regulations that banks have to go through. Look, lending is a very conservative establishment, a very long-held establishment. Lending is not a brand new thing in the economy. Lending has been around for thousands of years, and lending ultimately is something wherein there are pretty firm rules, and although there are ways to get what you want out of the situation, a la private lenders or SBA lenders, if you are looking at procuring acquisition financing, you're gonna have to take some form of risk. Nothing ventured, nothing gained, so I wanna be real clear about that. But at the end of the day, it all comes back to you vetting your deal and making sure you have a truly great company with intrinsic moats. I've talked about moats in prior videos, the idea that there are inherent advantages that your company that you're buying has that keep other competitors from taking market share, right? Ideally, your company that you're buying has a strong management team. It has increasing revenues and increasing earnings over the past 3 years. Ideally, you're buying at a low multiple, ideally just 2 or 3 times earnings, right? You're buying this company at a low multiple, which means your debt obligations are going to be lower relative to the revenues and the EBITDA. Therefore, you're able to put a greater percentage of the earnings back into your back pocket. That cash goes in your back pocket as opposed to the bank's back pocket, which again de-risks the deal, right? So at the end of the day, are there risks associated with SBA loans? Yes. Are there problems associated with SBA loans? Yes. Are there risks associated with most forms of acquisition financing? Usually. Though there are indeed, you can look for asset-based lenders who are gonna, collateralize the assets as opposed to you having to guarantee. There are ways around this depending on the business and the acquisition and your experience and candidly your ability to sell yourself and a million other factors. There are a lot of factors when it comes to buying businesses. It frustrates me when I see people who, for example, in our Facebook group write, quote unquote advice to people and act as if it's just black and white when it comes to buying businesses. Gosh, nothing could be further from the truth. I speak as an individual that's on the front lines doing this day in, day out. Buying businesses and financing acquisitions is a murky, blurry, 50 shades of gray type of game. And ultimately, it's all about assessing the pros versus the cons, the upside versus the downside. And as the acquisitions entrepreneur, you need to make strong decisions based on rationale and reason, based on facts and figures, and you need to weigh risk with reward and play that game appropriately. Look, I've taken considerable risk over the last 18 months. Thus far, by and large, it's paid off. I plan on taking considerably more risks in the coming 18 months, but all of these risks are calculated. I'm not just signing on dotted lines willy-nilly. I'm not just procuring financing willy-nilly. I'm not just doing things because, hey, I want to show the YouTube audience here that I know how to close deals. Buying businesses is a very serious game, and it's more than a game. It is you putting everything on the line in attempts to create considerable wealth in a fairly short amount of time. So This is not something to take lightly, and you always want to take a deep, hard look at the deal you're about to do before you sign on that dotted line, if you're ever going to do so. And you want to have your advisors look at it, and you want to look at this deal from every single angle. You want to stress test it from every single angle. You want to ask the tough questions. You want to look for contrarian advice. You want to look for all the reasons why this company could fail, all the things that could go wrong, all the things that you're not seeing. You want to look at that stuff before you sign on any dotted line, before you procure any SBA financing, not after the fact, because once you close a deal, closing a deal can be the best or the worst day of your life, depending on if that deal was indeed a good deal, right? Because when the ink dries and you sign on that dotted line and you're at the closing table, an experience I know about, right? That is arguably the greatest day of your life, unless if you sign a bad deal. And knock on wood, I've only been involved in situations wherein I've made the right decisions thus far. And that includes both, closing a deal as well as passing on a deal. It's not just the deals you close, it's the deals you don't close, the deals you pass. We've passed on a number of companies in early 2020 so far. Why? Because I wasn't ready to bet everything on that company. And you should, in my opinion, look at buying businesses as if you were signing on the dotted line, whether you have to or not. Ray Dalio says it best. He is deathly afraid of failing. And as a capital allocator and as a business buyer, I think that's a great frame to come from, to be desperately afraid of failure. Because failure in buying businesses is truly a bankruptcy waiting to happen. The stakes are high. That's why you can create a lot of wealth in a short amount of time relative to almost anything else you're going to do in the economy. So with that, there's some pros and cons of SBA lending, some other thoughts related to potentially procuring finance, whether it's SBA finance or financing of any kind. And ultimately, I hope this video has been valuable for you. It comes from an individual who's living this day in, day out. If you liked the video, throw it some love, share your comments below. Be sure to subscribe to the YouTube channel. And for more, click the link in the description just below this video.